Welcome to Own the Chaos. The stock market is crazy and chaotic.
And crash. You son
Oh, God. Hold on. Pause.
Brad and Fat Man Zoom are here to help you own it.
They were targeting Wall Street when they should have been targeting Capitol Hill. They should have been targeting DC. This is the same thing, and this is what people keep missing.
Taking it to the suits, being relatable and hilarious.
You bought GameStop at 400, didn't you? To the moon, baby. To the moon.
Get ready to own the chaos in 3, 2, 1.
What's up, everybody? Welcome to the Chaos. My name is Brad. That guy over there is Fat Man Zoom. The stock market is crazy and chaotic, and we made it our mission to help you own it, and it is a rough day today. But what do you say we get it onto the starting five, Fat Man Zoom?
Yes, sir. What's up, guys? Starting five today is Sam Cisneros, Mysterious Gal, Sean Ethier, Savvy Money Show, and Fernando Pereira Medina. We got a newcomer to the starting five.
Ooh, fancy.
More importantly, how do we sound, guys?
Do we sound much better? I hope
Got
so.
a new board, got a little slick board.
Yeah,
We got
stepping it up.
a pose off. You could start.
You want me to start?
Yeah, you start
Okay,
first. Go
okay.
solo.
All right.
I'll toss it up to you.
All right. You want me to do
Yeah, your camera, solo, yeah.
Okay.
Your Delta earnings stock reaction or Delta earnings prediction. You like that one? Delta earnings prediction? Delta earnings prediction. I wonder what it could be. Which stocks were they? Top three what?
Top 3 stocks to buy during a crash.
Oh, yeah, that's right. Top 3 stocks to buy during a crash. Holy shit balls. All right.
You ready?
Yeah.
All right. What the hell happened to a firm?
Wait, I'm looking there.
Oh, shit. What was the last one?
The other one was the next $2 trillion stock.
Oh, yeah. Next $2 trillion stock.
I think I know. I think I know.
We might have it down. What's up, everybody? Yeah, so the market is actually down. We got the S&P down around 15 points. The Dow is down 100 points. The NASDAQ is down 53 points. And honestly, it's really not that big of a drop when you consider everything that's been going on. CPI numbers came in. This is just typical July.
Hello.
What?
You're already getting into it? I had something to talk about.
Oh, I'm sorry. Yes, I was getting into. I don't know why.
No, go ahead.
Just like to dive right in.
Well, we got to let people load in. I got to
true.
talk to you about what's been going on since I saw you last. First off, you made this comment yesterday, and I would have to agree. It's kind of cool as we've just kind of fallen into giving those titles, but it is cool because it teases the titles for later. So I really like that.
I love that. Yeah. So people that are piling in, they kind of know what we're going to be talking about.
Yeah, and you guys that are out there, we didn't do the duo. We also got to do a duo. But like you guys that are out there, are you guys noticing the thumbnails? I am really happy with how the thumbnails have turned out since we've been doing the pose off.
Me too. I got to say, the click-through rate is also going up as well.
Is it?
Yeah.
Nice.
I mean, not by a huge clip or anything like that, but that one Apple video we did really, really well.
Do you guys like the clips? We were worried that we have so many clips, but we also felt like if you missed the live stream, we wanted to pull out the important stuff. So we can have 3 to even 4 clips a day. We don't want to saturate you guys, but 3 to 4 or 5 minute clips.
Right.
So far, we're loving it. We're loving the live stream. Let us know what you guys think.
That is true. We never really asked the people how they like our new format.
Yeah. Yeah.
We might not care.
All right, so let's do the duo thumbnail. Yeah, I know. Well, let's do the duo. CPI numbers are in?
CPI numbers are in.
Or what was it?
Well, I thought we were only doing clips of the topics that we just discussed, but
That's true. That's true.
we can still do like what's going on with the firm.
Yeah, that's true. What's going on with the firm? What's going on with the firm? I look like a curmudgeon, or I don't even know what I look like.
Just like an angry
Do
frog.
that one again, because that one was shitty.
Okay. What the hell's going on with the firm?
Darren likes the clips.
Jeff likes the clips as well.
G Money can't always make the live stream. That's what we thought. 'Cause
Yeah.
You can't make the live stream. It's kind of, there's a lot of things that go on during the live stream that it makes it almost worthless to rewatch. There's just a lot of
Yeah.
this stuff, right?
Right.
Like, why are you going to watch that? But in the moment, it's cool to listen to and for us to shoot the shit.
Right.
Alexandra said, we're easy. Brad looks like someone came up behind him. What does that mean?
I don't know. I guess maybe one of my poses.
Oh, one of your poses? Okay.
Yeah.
Gotcha. Yeah, so I got my ass handed to me today. This is how we segue into the topic.
Yes, that's
I got my ass
appreciate
handed
that.
to me today in the market.
very well done.
And let's just talk about this. I got to get this out of the way.
Okay.
I'm trying to balance. I want to add to Clover. That's what I want to say. I want to add to Clover.
Okay.
But I don't want to be a hypocrite. And I want to make sure, and this is why I have you here as my accountability partner.
Okay.
I want to balance making sure I stick to my plan and I don't do things emotionally, but
Yeah.
also understanding if there's an opportunity and not being so rigid that I'm missing opportunities. So with my long-term account only, not my short-term account, I'm riding free shares. I'm going to continue to do that. But all my accounts, I was riding free shares of Clover. In my long-term account, I actually added on to it because I felt like there was a huge opportunity.
Yeah.
And it's a long-term account. I was playing it through the rest of the year. So Clover in particular, I didn't need to ride free shares, although it would have been nice to continue to do it. So I added to it. And I was full position. I'm going to be honest. It's below $9. I want to do it again.
Yeah.
Am I going to regret this decision? Am I being emotional, or should I just stick to my normal plan? Because a couple things are at play. One thing's at play, which is I'm pretty much almost at full position size. And the other thing is at play is I run the risk of losing all the gains that I had. And right now, if you look at my portfolio, and I want to be clear with people, if you look at my portfolio, Clover is the largest gain of any stock I've had in my portfolio. Yeah. So it has performed really well. I just don't want to eat into that performance.
Well, how much of your portfolio is Clover taking up right now? Like,
Just under 10%, like
Just-
9.5%. So let's just say 10%.
and you're holding it in virtually every account that you have, correct?
Yes, but my short-term swing trading, which was my largest holding of it, I trimmed substantially out of it. I mean, I'm on free shares.
I mean, what else were you considering buying with the cash that you have, other than Clover?
That I currently have in my long-term account?
Yeah.
Nothing really. I was just waiting for a dip opportunity for something.
Okay. I mean, I think if you have almost 10% of Clover, that's a pretty substantial amount for me, like to be in something that's speculative. I would think that, especially on a day like today, buying a dip on some good stuff that's kind of come down, probably would make more sense for me. Maybe that you have not even close to 10%. I don't know what the allocation is with all your other stuff, but I would think that because you have Clover in virtually every other portfolio, that I would probably use the cash that I have to buy something else.
So I shouldn't buy Clover.
That would be my
That's probably
that would be my choice. I mean, that would just be me.
okay.
Yes.
That's fair. That's probably what I needed to hear.
Yeah. If you have it in every account you own.
I know, that's true. That's what I forget, because I look at it in one and I forget that it's in my other accounts.
Yeah. like you have plenty of it.
I do.
Yeah.
But the good news is I took that extra money for Clover. When I sold out of it, I loaded up Tesla. Tesla's my largest position.
Tesla's been doing pretty good. I mean, even though it's red today, I mean, it's up to what, 680
Yeah.
from at 650 just a few days ago.
Yep.
So that's rocking and rolling.
So I'm happy with that move. And we have news. We have things to talk about as it pertains to Tesla myself, but that's still probably a week away.
Yeah.
A week or two away.
Yeah.
So that position is only going to grow. And man, I'm just excited. You guys on the channel, you're going to continue to hear things about Tesla. You know, you're seeing, if you're a Chaos Crew member, you've seen it. It's a frequent flyer, as we say, for our watch list. It comes fairly frequently, but it's just because there's so much going on. We talked about it yesterday. It's always a topic of conversation.
Yep.
But man, there's more and more, and every day there's always something, coming out as far as they're concerned.
Yeah.
And I still feel that like people are like somehow they're underestimating Tesla, which is insane.
It's pretty incredible. Yeah.
But a conversation for another day. Somebody said, I want to read this. Blue Hall, love the clips with the title, "Is the stock market crash happening? Must be a joke." So let's get right into it. I think a lot of people's accounts are getting hammered. Especially a lot of what we talk about on the channel has been beaten down. We'll get into specific stocks, but the overall market, you talked about inflation numbers in the title, and you put the stock market crash happening? What are your thoughts? Where's this coming from?
So CPI numbers came out today, which is Consumer Price Index, and they are up 5.4% from this time last year. This is the highest number that we've seen since 2008, Batman Zoom. So a lot of people probably have a lot of anxiety as it relates to that. You're seeing these numbers, these inflationary numbers continue to go up. And so all they see essentially is the headline of 5.4%. Now, what does this mean? This means that things are going up in price. We haven't not acknowledged inflation prices, correct, Fat Man?
Yeah.
But we've talked about how what things are actually going up in price, and really it's the same thing. I mean, last month we saw used cars go up 10%, another 10%, and oil's gone up. Some of the energy stuff has gone up, but lumber actually gave back all of its gains for this year. And so some of the materials are actually coming down while some of the temporary inflation type stuff is going up. And so I think that people are misreading the CPI number. And we actually talked about this on Stockwatch Sunday, that we almost knew this was going to happen. And this kind of plays into the choppiness of July. Goldman Sachs came out and blew their earnings out of the water.
Yeah.
JP Morgan did as well. Pepsi rocked it this morning. So earnings season, I think, is going to carry us into the rest of the summer, and I think there's brighter or greener pastures on the other side of this. But I think this is just one day, and this feels like a lot of noise. The only thing that I could see sticking around is potentially oil numbers, but when you think about where the price of oil is right now, it hasn't gone up. It's still cheap. When you compare it to the price of everything else that's gone up, oil has lagged behind the most. And in an event where we're seeing this right now, increase in demand while supply is actually dwindling with oil, I imagine that that's probably going to continue to go up. So that's one thing that I think could not be transitory. But you look at everything else, and it seems as if this is all very temporary stuff. Used car sales are not going to remain this high, in my opinion, especially as the new cars start to come back into production. The chip shortages we already talked about being the worst of it being behind us. And what cracks me up is that everybody talks about don't fight the Fed, and then the Fed says, hey, everything's going to be temporary. This is inflation. We're seeing it happen, but it's all going to go away once things kind of get back into order. And nobody wants to take their word for it, so they continue to fight the Fed. It just makes no sense to me.
Yeah, and I think this trend is only going to continue. When you think about, I think it's more likely when you're anticipating news that the market's probably going to react negatively than positively, only because if you look at sort of the economy from a macro perspective, there's been so much bullishness. When you talk about reopening, when you talk about bills being passed, when you talk about e-commerce, there's all these bullish indicators. And so if you give bullish news, I think the market's going to essentially think, okay, well, we knew that.
Right.
But if any sliver of negativity comes through, it's a sell-off. And I think that trend's going to continue through the summer because that's sort of what we're expecting. We're in a bull run. We're in a bull scenario. And so it's almost that fear, what is going to happen here? So I think it's going to be hard to see news come that's going to push the market up 2-3%.
Yeah.
I think what's more likely, it's a non-issue, or you see a sell-off like today. And if you're bullish on the market, as we are, these are opportunities. And the one thing that I want to talk about in relation to just general market sell-offs is it sucks. My account, my public account is down 5%. today.
Yeah.
Which is a lot for a public account, for a trading account. Probably leans more towards the fact that I talked about earlier in the week. I was probably a little heavy speculative, and I paid for it today.
Yeah.
How I paid for it. I need to rethink certain things, but the reality is, like, you got to make sure that I want to prevent, like, people getting too caught up in what one day means to their account. And I'm victim of it, where it's like, oh, 1.5% day. Really, you got to look at the forest through the trees, and you can't get stuck on focusing on every little detail, because I can't remember any of those down 3, 4, 5% days last year. I remember the feeling, but I can't point one day out. Yeah. And that just speaks to, if you have a thesis and your thesis plays out, a day isn't going to matter. A week may not matter. And in the grand scheme of the horizon I look at, today isn't really going to matter, because I'm still bullish, unless there's some crazy thing like COVID happens. So That's where I'm at right now.
And I actually put this in the watch list for our Chaos Crew members. Links down in the description if you want to get that for free. Every morning we put out a watch list. And I even mentioned, hey, watch out for the CPI numbers. I think this is going to present a really good opportunity to buy the dip. I think that there's going to be a lot of noise that gets created because of this. And, that may impact some things. But I didn't want people to lose sight of necessarily what's going on in the overall economy and look at the big picture. We take opportunities like this to buy the dips on stuff. And, we knew that how choppy July was going to be. And I think that this is just another opportunity to take advantage of some of the noise that's going on.
Yeah, absolutely. Guys, hit that like button. How many people we got in the house?
We got 130 of you guys hanging in. So appreciate you guys tuning in live with us. 22 likes. What's up with that?
Jeppy Jensen said, thank you for predicting that July would suck. I imagine you took some measures feeling that July would suck.
It's been brutal.
So could continue to be choppy. We shall see. But as we alluded to earlier, there's a lot of good conversations that we have going on. We got, I think, 4 solid topics that we want to get through. So let's just get right into it. What do you got to kick us off?
So the first thing that I'd like to kick us off with is Delta Airlines. They have earnings tomorrow, and normally we cover earnings after hours, but I thought this was important enough to really kind of address to see what's going to be happening tomorrow pre-market. So we won't be able to cover this live, but I wanted to make sure that we kind of gave our predictions as far as Delta is concerned. The stock has come down quite a bit, and I think that we could see this come down a little bit more, but I'm really encouraged by I'm hopeful, I guess I should say, about what earnings could look like tomorrow. Their estimated earnings per share at a loss of $1.40. And if there's anything that we've seen as far as boots on the ground's concerned, we think that Delta could come in, and even if they miss their earnings estimates tomorrow, the outlook here could be very substantial because of all of the demand that we're seeing from just travel, from air travel in general. And I think that we could be actually surprised, Fat Man Zoom, at the increase of business travel too. I know that that's something that you're not necessarily on board with just yet, but I would be very encouraged if we actually did see an increase in business travel, and if it was anything substantial, I think that this could send Delta higher, and all of the other airlines could potentially also react as a result.
I'm predicting a massive earnings tomorrow, and I just mean a great response. I expect a beat. But this isn't a foregone conclusion. Delta has missed 4 earnings in a row.
Yeah.
Now they've slightly missed. They're expected at a loss of $1.40 a share. I think they beat that easily. I hope they beat that easily. But I'm going to say this comes in at a loss of 50 cents a share. I actually shouldn't do even numbers. A loss of 49 cents a share.
So it's going to be earnings by a whole $1?
Yeah.
Oh, wow. That's awesome.
Which is bold and probably highly unlikely, but I don't think it even matters if I'm right or wrong.
Yeah.
I think they do need to beat, but their guidance, I think we're going to see a really bullish conversation, and I hope their CEO does a great job of quelling the concerns surrounding international travel, painting a rosy picture, and helping people understand that, yes, it may take time for restrictions to ease, but everybody in the world wants travel to come back, international travel to come back. It will be back, and so I'm hoping they increase guidance. If it doesn't happen this quarter, it'll certainly happen next. I do have Delta in my long-term, the public portfolio, the long-term swing trading portfolio. So we'll see what happens, but I have no plans to sell it. And I think once it gets moving again, it's going to have a nice little run. So we'll see what happens.
Yeah, I'm thinking that they do end up beating. I think they come in at, I wasn't going as bold as you, but I was going at $1.25. And so I think any beat is going to be good for the stock, no matter what it is. It's flirting around with the 200-day moving average right now. And I think that if they end up beating coming in here tomorrow pre-market, it should be a solid day for Delta and really all of the industrials. So we could see something like Boeing, we could see American Airlines, Spirit, Southwest, all of them probably react. This could very easily set the tone for all travel stocks if they come in and give a positive outlook on what they're seeing coming in as far as air travel is concerned. I love this setup, and we've seen this before. Lots of times when you see a sell-off going into earnings, they come in with unexpected beat, and then that's usually when you see a pretty decent run up the next day. Not when a stock runs into earnings with the expectations that they're going to beat, but if they actually sell off and then they end up beating, that's usually when you see a pretty decent move up. So I think this is actually a really good opportunity. Of course, playing earnings is always a gamble, but the risk reward here seems pretty good.
All right, Alexandra, this one's for you. Bro, I want to talk about the next $2 trillion stock.
Let's do it.
$2 trillion, $2 trillion, those are benchmarks for publicly traded stocks. There's not many of them.
Yeah.
There's only a handful of them. So to be a $2 trillion stock, that's a big thing. I predict that Google is the next $2 trillion stock. Right now, and we're talking about market cap. Right now, it's about 1.725 trillion, and it's all-time highs, running beautifully, and it's been on a great run. We've talked about how we think it's one of the more underrated FANG stocks, underrated tech stocks. I put it in the watch list today. You know, I love this stock, and this is one that when you're thinking about stocks for your forever accounts, your investment accounts to buy and hold forever. This one doesn't get talked about enough, in my opinion. They recently had an acquisition with a fintech company, a Japanese fintech company called Pring, which I thought it was really cool moving into fintech space. We actually have another company that's adding things to their fintech portfolio that we'll talk about in a second. But I like this move. They want to increase their exposure internationally, specifically in Asian markets. I think this is a great move. But when you think about all that they have to offer and you look at, let's say just Facebook, which I'm not saying that Facebook doesn't have opportunities, because we talked about there's good thing that Facebook is doing as far as a diversification of business concerned.
Yeah.
Google does really well as far as diversifying their revenue streams, has exposure in multiple places. So Google has ad revenue, which is a dominant factor in their whole revenue mix. But YouTube, you think about YouTube, the opportunities there. You think about their search, the opportunities there. You think about just their services. I know you've mentioned travel, but like their suite services, so like Google Sheets, Google Docs, they're great.
Yeah.
They do all of those things that, you know, YouTube on its own could be a publicly traded company, and I think it could do really well. So I love what they do, not to mention Google Cloud. When you think about Amazon Web Services, their cloud services, Microsoft, Azure, Google doesn't get talked about enough, but it's right up there with those other two, and it's going to continue to gain customers and dominate. I believe that not only is Google the most underrated FANG, but I think it is the next $2 trillion company. And so you're aware, because it sits just over 2,600 right now. In order for it to be a $2 trillion company, the per share price needs to be at $3,025. So the question becomes, can it and will it hit $3,000, which will in turn make it a $2 trillion company?
I think if you look at Google as the number one search engine in the world.
Who's number two, by the way?
Who's number two?
Yeah.
It's YouTube.
Who owns YouTube?
Google.
All right, just checking.
So, like, that in and of itself is a big deal. So, not only its competition is also its second sister company, whatever you want to call it. So it's wild to see how actually underappreciated Google is. even though it's almost like you're just expecting Google to just come in and crush it all of the time. So like to really take a deep dive into how the company is and what it's been doing, it really is something that actually you look at everything that they have going on, and it's still undervalued as hard as that is to believe. I mean, you look at something like Apple and the money they're bringing in and the sources of revenue that's coming into their business. Google's right up there with Amazon and all of the other fangs, really. So I think that you're right. I think that Google could very well easily be the next one. And the fastest to 2 trillion, I think, could be Facebook. I'm going to put that out there.
Microsoft, we like Microsoft, let me be clear, but Microsoft, we've talked about their acquisitions and how they sort of dropped the ball on a lot of things. Like the best example is probably Skype. I don't want to say they did a poor job on LinkedIn, but they haven't really done anything with LinkedIn, in my opinion, that's made it competitive.
Teams sucks.
Teams is horrible.
Yeah.
And so you look at Google, and Google's the opposite. Google Drive, Gmail, all their services, to me, Google will replace Microsoft as far as when you're having that tech conversation.
Yeah.
And I think it already really has, but the slower adopter has been institutional, corporate. So I think you're going to see that shift happen, because even the video platform, Zoom is still king, but Google in business, it's, to me, the second most common used one as far as what I've seen in business. And so I think that Google's really the only competition for Zoom, but I don't even think they want to be number one. I think their suite of services is best in class when you look at software.
Yeah, I agree. I mean,
so you heard it here. Google is the next $2 trillion company. Holla at me. I probably should have checked who was closest to second, because there's probably somebody who's at like 1.9. But I'm going to say. Somebody asked, Alexander said, what price is it to buy? So why don't you talk about the technicals?
yeah, that's a really great question. So looking at it today, it's actually still flat on the day. We'll look at the chart here. I mentioned on the watch list that there's potential for this to pull back to like around 25.50. I would be surprised if we saw it correct all the way down there, just given everything that's coming up, especially with earnings about 2 weeks away. I would be surprised to see Google have any kind of substantial correction. But if it does, then I think that that's certainly a good opportunity to potentially scoop up some Google if it bounces off of that 25.50 area. But honestly, I think at this point, if you really want into Google, you just have to own it no matter where it's at.
And I have the numbers. Sorry, I should have brought this up. Should have been prepared for this. But there's only two companies, that's Apple and Microsoft, that are $2 trillion mark.
Yes, which Apple just did.
No. Well, Microsoft did it most recently.
I'm sorry. Apple just hit 2.5. Sorry.
So, yes. So Amazon is third at 1.875 trillion, and Google is fourth at 1.725 trillion, which is, that's going to be a tight race, and possibly Amazon could beat them.
Yeah.
But my question to you is, how many 2 trillionaire clubs do we have at the end of the year?
Ooh, that's a good question. So there's only 2 right now?
There's only 2. And there's only 5 that are really 1 trillion.
Facebook just hit 1 trillion, right?
Just hit 1 trillion.
So I don't think Facebook's going to hit it this year. I'll say 4.
I think I think so too.
I'll say 4.
And I think the bigger question is, and maybe we'll cover this at a different time, is the $1 trillion club, which is, because there's only 5 in the $1 trillion club, and number 6. Do you want to guess what company is number 6? You could probably guess it.
That's like not in the $1 trillion club yet?
Yeah.
Oh, shit.
Okay, it's a pretty obvious guess.
Netflix?
Tesla.
Oh, duh.
660 million. So it's pretty far off from $1 trillion.
Yeah, and that's number 6.
That's going to be a nice race. That's number 6.
Yeah.
NVIDIA, though, catching steam.
Well, yeah.
It's at 511.
It won't for long.
So this is a cool little thing. But anyways,
cool.
What do we got next?
So the title says, is the stock market crash happening? It's not happening. It's just a correction, as we talked about. But in the event that it does, I have a couple of stocks that you may want to consider buying if a stock market crash occurs. And we just got done talking about Apple. That would be the first one that I go to. I mean, every time we've seen a stock market crash, Apple comes back with a vengeance. Last year, it came back 80%. I'm sorry, ended 80% up on the year after a substantial stock market crash. At one point, Apple was down 40% and then came back 80%. It was just crazy. So Apple would be the first one in the event of a stock market crash. And I'm going to assume that the reason it would crash is because of what everybody's talking about is the inflation scare. So let's just go with that narrative. So in an inflation scare, I think that Apple would be a huge opportunity to buy up on the dip, especially with everything that they have going on. Even though there's inflation happening, demand for Apple products, hardware, what have you, people are still spending that money like crazy. So I think that Apple is still going to be king. I think it's definitely one that it's nice and safe to buy. Looking at equities in general, there isn't a whole lot of them out there that I would really just hop on if the stock market was crashing, but Apple would be numero uno. You look at the chart here, obviously it has just gone absolutely insane, but if I were to see another crash happen, I could see Apple coming back down to retest maybe, let's just call it $100 a share. So I'll say $100 a share. So that is about, that would constitute a crash.
Yeah.
About 35%. So if that ends up happening, I think that I would be selling everything I have to buy Apple at that point. So that would be the first one, Fat Man Zoom. What are your thoughts on that one?
I love it. Apple is still king, and I know everybody wants the meme stock, but God, they've been around forever, but they continue to evolve and increase, and just show why they're best in class as far as business is concerned.
Yeah, I agree. My second one is going to be CrowdStrike, which might catch people by surprise, but CrowdStrike in a crash, I think, would be huge, especially if inflation occurs. Businesses are still going to need to function, and I think that they are at most risk during a stock market crash, especially as it relates to inflation. So if there's anything that you're going to put money towards as a small business or even as a corporation, it's going to be towards your cybersecurity. You're not going to sacrifice that expense for your business. So CrowdStrike, I think, is definitely one that you could end up buying up on any kind of significant drop-off or a crash, and I would consider owning it now, even as it stands. So looking at the chart here as well, I think that CrowdStrike could be a really good buy if by some chance it crashes back down to the 150 mark. Now I'm talking, this is legit crash, guys. Right now it's sitting at 261. So if we see a crash, that's the kind of wild drop off I could see happening. But I, again, would be selling my shirt to go buy some CrowdStrike because I don't think that this is something, and that goes for any cybersecurity, but in my opinion, CrowdStrike's best in class, and that's what I'm going to do in the event that a major crash would take place. What say you, Fat Man Zoom, on that one?
I love it. And I think cybersecurity should be in any long-term portfolio, in any portfolio, really. Cybersecurity is a good opportunity. Now, keep this in mind, though. You alluded to it. You're going to see a lot more volatility.
Yeah.
From CrowdStrike than you would from Apple. So let's say Apple crashes 35%. During that same period, you probably would see CrowdStrike fall
50.
Yeah, that would be like normal to do. So it would be scarier, but you have the potential to make more potentially. So remember volatility when you're thinking about this, and look at, and actually their betas are surprisingly similar. Apple's is like 1.2 and Crowd's is 1.23. So it's surprisingly similar, but I think you'll still see more volatility just because it's tech and a younger company and not as profitable as Apple.
Yep, I agree. I like it. So my last one of the three stocks that I would buy in the event of a stock market crash, this might come as another surprise to some people, but it would be ExxonMobil.
Mini Zoom favorite.
I think when you look at a crash, especially if it happens as a result of an inflation scare, what happened in the 70s? I mean, oil went through the roof. So if there's any stock that I'm going to go after, it's going to be something that's energy related. You really could go after anything that's energy related, but again, we're looking at best in class. We're looking at, I would consider a Chevron in that category as well, but I went with Exxon here. We even look at the chart, and this time last year, we were looking at negative numbers as far as oil is concerned, and people just started buying the hell out of it. If you did that, you would have doubled your money from there till now. Actually, more than that. And you look at the chart here, and the proof is in the pudding here. So when the crash initially happened last year in 2020, went from $30 a share all the way up to around $54.81, and then we had that crazy, wild, situation in which we were just oversupplied because people were locked down, and we saw negative rates on oil. But then it continued to go up. So you could have double dipped on this twice. And I think that actually continues to go up from here, just as given the environment that we're in. But in the event of a crash, Fat Man Zoom, I think that ExxonMobil will be a great buy.
I love it. Like I said, Mini Zoom favorite. This is one of the stocks she picked. Went against both of us, and she ended up being right. But no, I agree. I agree with that. And I think there's a bigger point, which is rather than worry about freaking out about inflation or not, think about both scenarios. And with rising inflation or just fears, think about what you're going to get into. So you have a plan, and I wouldn't worry too much about like trying to predict what happens, but being prepared with whatever plays out. And so that's a great call. I like it.
I mean, think about what happens when, in the event that the economy is in danger or what have you, right?
Yeah.
When the ransomware attack happened on the Colonial Pipeline, people were going crazy, scooping up oil as much as they could. And so oil rates went up as a result. And I think that would be a really good opportunity to scoop up some energy stocks.
The last thing I'll say is that we said this yesterday with Tesla, where we're in the early innings as far as EVs, autonomous driving. We haven't even scratched robo-taxis, which nobody talks about.
Yeah.
We're in the early innings. CrowdStrike, same thing. We're in the early innings as far as cybersecurity is concerned. So while it might feel like these things are doing really well, there is still a long road to go and huge opportunity, huge upside. I love those guys.
Absolutely.
Three very different stocks, a good mix of stocks, not unlike our watch list. We have a free watch list that we send out every morning before the market opens at 9 a.m. Eastern time. If you guys want access to those 5 stocks, we do a fundamental breakdown, a technical breakdown. Click on the link in the description to get your free watch list as well. Boom. All right.
Real quick. There's 134 of you guys here watching, still under 50 likes. If we could get that to 80, I would consider that a success. But let's get the likes up, folks. We certainly would appreciate it if you're getting value out of today's live stream. Go ahead, Fat Man Zoom.
I'm bringing up this topic, but it actually pertains more to you than it does to me. So I'm just going to set the stage. Apple had, I think, well, there's huge rumors that came out regarding Apple. This isn't confirmed yet, but basically Apple is releasing a buy now, pay later service. Brad, did you hear about this?
I did.
Of course you did, because you sent it to me. Apple released a buy now, pay later, which you think about buy now, pay laters we were really bullish on this channel. Affirm, PayPal are probably the best examples of it. And basically the rumors are what it's going to be is Apple Pay Later, and you're going to have 2 options. You're going to have a short-term and a long-term option. Short-term option is going to be 4 installments, essentially over 2 months, and that'll be interest-free. Or you're going to have a long-term option, which is interest, right? And we don't know, it'll be interest-bearing. We don't know what that's going to be, but it's a similar model that both those companies have. And subsequently, both of those stocks, which we talked about, PayPal and Affirm, dropped, but Affirm got hammered.
Yeah.
It closed down over 10%. And what's interesting about the situation is, first, let me just say, I love this move by Apple.
Yeah.
I think it's an incredible move by Apple. I love Affirm, but what a great move. Their services is a $50 million industry for them. 50 billion? What's the number? 50 billion?
Yeah,
50 billion per year. And so they're continuing to grow that, and they've shown they're going to continue to grow that. For those of you who continue to say iPhone this, iPhone that, and feel like the run is kind of like we've reached critical mass with iPhones and it's not a big deal, these new iPhone launches, this is where I think you're misguided, is the fact that the iPhone is not a phone. It's a tool. It's basically like a lifestyle gadget. And so we need to look beyond it as just a calling service. It's your computer, it's your wallet, it's your phone, it's your administrative assistant. What the iPhone generally did was it basically made the calling service a secondary feature.
Yeah.
And so when you guys evaluate what you think's going to happen with Apple or not, think about that. Think about how much you use your computer as opposed to your phone. Think about what you buy with now. Compared to 5 years ago, 10 years ago, I use my phone way more to buy things than I now do my computer before, or even in person.
Yeah.
And so what Apple is doing is just extending their reach and their ecosystem. And so I love what they're doing. We talked about them moving away from hardware, and who cares what they do with hardware, because as they expand these services, this is going to be high margin revenue, and this is what's going to take Apple to $3 trillion and really just keep it in the pole position as far as publicly traded companies.
You know what? When you were talking about that, not worrying about hardware and all, going into high margin revenue, the first thing I thought about, I know it's kind of crazy, but was Peloton.
Yeah.
Everybody gives us a hard time about how Peloton, the bikes are just going to be, laundry racks or whatever. It's like they're doing the same thing because they're seeing it work with Apple. But nevertheless, I think that this is a great move by Apple, but I think this is also a really good opportunity to scoop up some Affirm. I am personally in Affirm myself, and I was actually thinking about getting out of it today because it just hadn't been moving after its move up, and thought it might have been time to exit. And then this news came out, so now I'm kind of thinking, well, maybe it's a good opportunity to take a hold of the overreaction. And I think that this could be an overreaction because we saw this almost a year ago when Facebook came out and announced that they were going to have a video conferencing platform, and Zoom tanked.
Yeah.
Everybody thought that Zoom was going to be done for. They thought that Teams and Facebook and all the other competition that Zoom had, it was going to be overrun, and it was going to be over for them. And then we saw it just go absolutely insane. I think that we could certainly see this come from Affirm too. Everybody thinks that one company is just going to be able to take over all of the market share, and there's not going to be any room left for anybody else. And I just don't think that that's true. I mean, we saw that Affirm has been making moves to get away from, not get away from, but at least broaden their, diversify their revenue portfolio, especially with the deal with Shopify. And I think that they're only going to continue to grow. So while this could be a temporary hit for Affirm, I don't think that this is just a nail in the coffin for them. And this could be a good opportunity to take advantage of a little bit of an overreaction today. A 13% drop, and that was the low of the day, was around 13%. That just seems a little crazy to me.
Well, what's interesting, and I think the question is Affirm a buy, which you're saying yes. It sounds like you're saying yes.
Yeah.
It's a buy for you. I would agree. I think it's interesting because I think Apple and Affirm are now a buy.
Yeah.
I think Apple is a buy because I do love the move. If it does impact Affirm, I don't think we're going to see that for years to come because I think it's going to take a little bit of time for adoption. Remember, this is speculation, so likely looks like it's going to happen, but it's still speculation. I mean, wasn't Apple going to have a car, an EV?
Yes.
Right? Like, we're not talking about it anymore because it's going to be a few years out. Apple Pay, while it's not going to take as long, they still have to announce, they still have to roll out, and then you have to get people to adopt it. That takes time. Short term, I would worry, if I'm an Affirm holder, I don't worry about it at all. I do view this as an opportunity. Earnings are September 7th, so maybe wait to see how things shake out over the next month because we're already worried a little bit about July. August, this may show up as a top stock in August. However, I wouldn't be mad for anybody trying to take the opportunity now, but I think they're going to have a really great earnings. Where it does worry me for Affirm is long-term for this reason, Brad. There's not going to be one winner of this, but there is a lot of saturation in buy now, pay later, and there's only going to be more. Well, Affirm, as a newer company, they don't have the cash pile that Apple has.
Yeah.
And they don't need it. Apple doesn't need it like Affirm needs it. Apple doesn't need the revenue like Affirm needs the revenue. This is just like another revenue stream 12. Right. That's icing on the cake. Affirm, this is their core competency. This is their main revenue stream. So they need this. And what's going to happen is as more competition comes through, especially with the likes of Apple, interest rates in the long-term plans are going to come down.
Yep.
And Apple will be able to do that and survive that. I don't know if Affirm will. They may be able to survive, but their growth is going to slow when you look 1 year, 2 year, 3 years out because they're going to have to remain competitive. Because if their average interest rates are 30%, Apple could say, well, you know what, we're going to give you 20. And so what does the firm got to do? Not only do they have to meet 20, but they probably have to beat 20.
Yeah.
And so you're cutting into to that revenue, which is their main revenue. I worry about that for the long term. I'm not saying I wouldn't sell out of it if I had it in my long-term investment, but I would certainly keep an eye on it and see when it rolls out how that happens. But God, man, Apple again with another great move. I love this. I love this, and it does make sense because they just had their Apple credit card last year that they launched.
Well, I was just about to talk about the credit card. I mean, the credit card came out, and it didn't kill any of the other credit card companies.
No, it didn't.
So I think that there's something to be said for that as well. That I think there's plenty of room for more than one pay-as-you-go type of platform. A firm's going to be able to do a lot of that. We look at the chart right now, and it looks like it actually held up its support at around $58 rather well. You can see that it spiked down below that, but has recouped quite a bit. After hours, right now, it's up around 0.75%, so it looks as if people are starting to buy this back up. I think it's definitely a good opportunity to take advantage of the opportunity on the overreaction.
Same with EVs as well.
Yeah.
They announced EV. The other EV companies shit the bed a little bit, and now we forgot that it even happened.
Yeah.
It was a thing.
Yeah.
So that's a good call. Guys, those are our topics for today. Make sure you guys like and subscribe. Hit that notification bell. We are here every Monday through Thursday at 3:30 p.m. Eastern Time, and we're also here on Sundays at 7:30 p.m. Eastern Time. Always live, always bringing content. So if you like it, make sure you guys give us a thumbs up.
That's going to do it for us, guys. Appreciate you hanging out. If you guys want to be a bigger part of the community of Own the Chaos, make sure you're hitting the join button next to subscribe as well. Not only do you get the watch list that we give out for free, but you also get access to our Discord groups. You get trade alerts from my portfolio specifically. You also get updates on that portfolio to see exactly what I'm in and how I'm performing. If you guys want to be a part of that, make sure you hit the join button next to subscribe. It'll help support the studio you see behind us and the channel as well, so we certainly would appreciate that. It's going to do it for us. Thanks so much for tuning in. Again, hit that like button on your way out the door, and we out.
Bye.
Bitches.